skew and verticals. You're either with me or against me. So we'll kind of talk a little about skew as a sentiment indicator, talk about using skew and trading. It's a big deal. I mean, if you like to trade verticals, or if you're just trying to understand sentiment, you got to understand skew a little bit, right? And like, we're going to try to keep it higher level, but from an application standpoint in trading, you buy low and sell high, right? It's the old axiom. We'll talk about it from the perspective of implied volatility. But yesterday we talked about the fact that the market had not really capitulated on Friday. Don talked about that this morning. And we talked about the fact that if we're going to define capitulation, we got to have some breadth, right? We got to have a lot of stuff selling to the downside. And the one we're talking about was XLU touching the upper end of the expected move. So if I bring the expected move up here, I'm a load steady set, auto expected move. We touched the 1 times the expected move for the week yesterday. And from my perspective, look, if the market's going to roll over, which I expect that it will and continue to roll over, that, look, I mean, utilities it's got to go with it at some point. And so that was the most overbought sector yesterday. And so we decided to short it or go bearish on it based on what? Well, based on something that came up. And I'm going to show you the Ghost Prince console in just a second. But so I can go back in time, right? So I can pick yesterday and I type in XLU, and what you'll see right here, and I'm going to give you more on this tomorrow. But look, we had upwards of 3,000 contracts bought in one print, almost at the ask yesterday. It was the 8650 puts. And what I'll tell you is we had about quickly got up to 5,000 contracts. Now, here's the deal. XLU does not normally trade that kind of size, except for when you see these kinds of trades. Now, again, you could try to be like, okay, I think utilities are going to drop or whatever. You think utilities overbought. And I gave you the backstory, but why did I focus on utilities yesterday? What do you think? We got Tim in the house. Anyone else want to say hi? We got Craig's. Good to have you as well. So here's the deal. What turned my attention to utilities yesterday and looking bearish? So I can talk about, yes, there's breadth. Yes, utilities are up here. Yes, utilities have to catch down. But why yesterday? Why was it yesterday we're focused on utilities? It's right here. And it was funny, like after I got off, we had a meeting about the thing we're going to do tomorrow. And I got the console up, I'm showing it. And all of a sudden, we had this pop up right in the midst of this, right? So I had 18 based on my filters. I had 18 different. How we doing, Rodney? Yesterday, Rodney was talking about a trade he did, and I just couldn't think. I kept thinking about "Doing Time" by Sublime. Rodney's on the microphone with Ross MG. Anyway, whatever. But I just kept thinking about that song. But anyway, "Doing Time" by Sublime. But we got Rock Bro 77. We got Joe up in the house. But anyway, so I was on yesterday. We're doing this. We're doing kind of walking through. I'm showing the marketing guys how this works. And I had about 17 different stocks on here based on my filter. And then GDXJ just popped up, 10,000 contracts, right? So yesterday, 10,000 contracts bought in one print. Okay. One trade just popped up right as we're on it. And so what do we do? So yesterday in Ghost Prince, I sent out 2 trades yesterday. Again, kind of a quiet day. XLU is one, which I discussed here. How many took XLU, by the way? Did anyone get an XLU? The trade right now is up about 30%. Talked about, we looked at the out here. September was the 87, 85. So buy deep and wide. 1 month, 2 strike vertical. It's a 77 cents right now. It's trading for 60. So a lot of you took it. Great. So I sent that out to Ghost Prince. We also did GDXJ. Man, we did GDXJ as well yesterday. So yesterday we closed out GDX and Ghost Prince for 60%. And I'm not in gold anymore. Don's in gold in 3 trades a week, GLD. And then all of a sudden we're going through that and I see GDXJ pop up on the console. And this was the trade, 10,000 contracts in one print. Yeah, so inflection got it on 52 on GLD and Don's Don's free trades a week. So we were out of GDX yesterday, and I'm like, shoot, do I get back in? we'd hit man, we had 60%, and our expiration was next Friday. So we don't have a lot of time left. I don't want to, I don't want to just not get out here and we got a week and a half left. That's not wise, right? 2 weeks to expiration. We're looking to take any profit. Last week we're going to take a loss that's less than 50%. But I was like, man, I want to stay in gold. But then all of a sudden on the console, GDXJ popped up. And so again, we're seeing that re-engagement, and GDXJ, these are junior gold miners, and we're just looking, we just need this thing to get up here a little bit. So for this, we had the 72 strike. We just need GDXJ to get up in here, and we're out at 70%. For XLU, that's our target here. XLU, we're looking at getting out. So again, on XLU, as we talked, we got the 85. As this gets down in this area right here, we'll be able to get out a 70% gain. Last Thursday, XLF, so last Thursday, right there, 731. And let me show you. So I'm just go back to 731. It's always dangerous. It's always dangerous when you are demoing something, but XLF in here, right there, 15,000 contracts at the ass. That was in September 30th. 52 strike, 15,000 contracts bought in one trade. How do I know? That's when it crossed 2,000. That was our vol alert. It was at the ask. Again, we got the time over here. It was 10:06 a.m. Eastern time, but boom, that hit. So XLF. So last week, I wanted to get more bearish. We closed out some stuff, and I wanted to be able to, so we hadn't closed out some stuff, but I wanted to lean in a little more on this, and the spreads were super cheap. Super cheap on XLF. So we got here, we're up 90% the next day. Well, we weren't looking for 90%. So we bought a 52, sold a 49. We got it for 50 cents. We're shooting for $1.80. Okay. So on occasion, I'll shoot for bigger moves. And I'm telling you this for a reason, because we're talking about skew, right? This XLF position was super cheap. We bought the 52, we sold the 50, and we did it for 50 cents. A $3 wide spread, and the 52 was around a 40 delta. This spread was super cheap, and because of that, and again, I wanted to lean into the selling in the market because, as you know, I'm expecting a 5 to 10% correction off of the June 23rd signal. We have a VIX trade going on. We were up 60%. Now we're flat in it. This can easily go back up again, right? So again, we didn't quite trigger. We're looking for 24, 25 plus. And in fact, what we are looking for is this. We're looking for this to get below 1, the 3-month to 1-month VIX ratio. This gets down here, we'll close out our VIX trade. But we're shooting, and we have a limit in there for 225. We want to close it for a 250% gain. Okay. Chemist says he books XLF on Friday, and there's no harm in that. So, but the thing is, we took off some bearish trades in Ghost Print for some decent gains. And so I wanted to keep some stuff on. We closed out IWM, for example, 36% gain, but we're getting close to expiration. Fortunately, we closed out FTAI ahead of the earnings. Then it jumped on me, but the options market wasn't liquid enough, but our target was there. But we just took a small gain in that one, about 1.3%. But the idea is that, look, I mean, we're taking swings, and I wanted a bigger swing in XLF because if I close out all of my bearish trades, I've got nothing left. So last night, as my son, he's a 7th grader, he's playing football for the first tackle football for the first time, and he's a bigger kid. I'm like, he's 97th percentile in height, 97th percentile in weight. And he just went to the doctor last week for his appointment before school. So he's a big, strong kid, but he's also got a great arm. So he's 7th grade, going into 7th grade, and he's a pitcher. and he's throwing, we clocked him at 68 one time, but he's probably throwing 70 miles an hour. But so he's throwing 70 miles an hour as going into 7th grade as a 12-year-old. And he's about 5'5", 5'6", right? So he hasn't really grown a lot yet, but he's relatively tall for his grade. But he wants to hit people, but he doesn't know how to hit people. He's got 3 brothers. You think they'd know how to hit. I had 3 brothers, and we were always hitting each other growing up. But they don't necessarily interact that way. But anyway, so he's trying to figure out how to hit, so last night I was taking some video of him at practice, showed him. And so I get out my blocking dummy. I say, look, hit me, right? Hands together, pop. He's playing line. Worry about, he's over the weight limit to play a skill position. But anyway, we can throw a ball 45 yards. Okay. But anyway, so he's trying to pop me, hit me. Well, the thing is, he's locking out his legs. You lock out your legs. Where's your power going to come from? How do you maintain your power and your push? How are you going to drive somebody? You got to keep your Z with your legs. I've coached line for years. But anyway, so the idea is you got to keep that Z. You got to keep driving me, right? Push up with your hands, keep your legs bent. But instead, he's locking out his legs early. He's not punching right off the bat. This is what happens on bearish trades, right? Is you get 70%, you start to limit out, or 70% to the upside, you start to limit out, and you don't have anything left for the additional move. So we're stretching XLF. What else is there? We could find more bearish trades out there, but in this case, because the skew was so favorable in XLF, we stretched our legs. We're keeping our Z in our legs. Z, you got a bent knee, right? You got a bent foot. You're right, your heels off the ground. You're on the balls of your feet, and you're driving, you're chopping, and you're driving up with your hands, right? That's what linemen do. And so, but the idea is again, if I close XLF at 70%, it was up 90%. Now what do we do? Where do we go from there? XLF, from my perspective, is as good of a position to be in on the bearish side right now. And again, one of the confirmations of which happened last Thursday, right there, 15,000 contracts. Now here's the deal. Was it a hedge? Probably. Doesn't matter. What's the timing of the hedge? XLU, was it a hedge? Maybe. What's the timing? Why today versus yesterday? And XLF, we had the top end up here. Another big trade at that level. Another big trade there. Another big trade back here as we're hitting the highs. Okay. So Joe up took Friday and added back yesterday. Great. So it's a little bit when you're sending alerts out, that's harder to do, right? So close it here. Oh, we're up. Boom. Even better. So Joe up did a great thing, right? Oh, I closed out here, got a 90%, then I re-entered here, and we'll see where we go. We got 40 some odd days. So let's talk about skew, because every one of these trades are benefiting from skew. So and again, Don talked about this morning, why are you buying stocks right now? If you want to go bullish, why buy stock? I mean, maybe intraday, again, intraday maybe makes, why overnight? There's so much event risk right now. Why? I've been showing this for a while, but let's switch gadget. Let's go to, watch list. Where are we at here? There we go. Watch list. This is my GP industrial watch list right here in tech. And again, these are all high short interest stocks, right? Most of them anyway. ZBR down 10.5% today. Let's take a look at it. Yeah. Why can't I take a look at it? Where's my link? My link is unlinked. That's not good. Link that, baby. So ZBRA. How about that guy? If you own stock in ZBRA, stock's down 10.5% today. It could be down another 10% tomorrow. The stock gaps on the open and then just shuts the door, right? Let's flip this around. What's on the other side? Symantec, we're up 10% here, right? Tomorrow, this could be down 10%. We have earnings coming up. This stock could be down 40% tomorrow. All of these stocks are highly volatile. Why in the world are you buying stock in these companies? These are not long-term investments. The idea is that with most all of these companies, skew is in your favor. You don't need to have all of your capital at risk all of the time. Yes, it feels good to try to hit a home run on 20, 30, 40% move. But here's the deal. Yes, if you put 10% of your account in stock and it goes up 40%, it feels really good. But on the same token, when you have 10% of your portfolio, 5% of your portfolio account, and it drops 40% in a day, it feels equally as terrible. In fact, the 40% down day is worse than is more impactful than the 40% up day that may have taken several weeks, maybe a month, 2 months to take place. So you take 3 steps forward and 1 giant step back with these names. And so as we talk about skew, realize that most of these highly volatile stocks that you're trading, and if you own any of these on the list over here, which I'll guarantee many of you are, if you're in quantum, in nuclear, you're in any sort of technological area, again, you have massively high short interest. Some of these, like a Medtronic's, an entirely different animal, right? Google, entirely different animal. We got 2 stocks in here that aren't around anymore. URE. Oh, yeah. Not sure why it's not loading there. Anyway, 0%. Yeah, for FREY is not on there anymore. But again, Stryker, ISRG, some of these are a little bit different, right? But then you get your Rigettis, you get your again, all of these companies. Just go down the list with this watch list here. VSAT, satellite companies. This could be down what? From the high over here, 27. 3 days later, we're at 16, and then we drop to 6. Okay? So the point is, you need to understand skew. Emotional capital is the second most scarce resource. I don't disagree with that. These stocks are again hugely rewarding and hugely disappointing. Generally speaking, most people that trade stuff like VSAT, trade stock, generally speaking, end up losing. Right? They trade here and they hold too long and it's back here and then down here. Right? You get a move from 13 to 29 and then you're back to 13 and then you plumb the depths at 11 and then 7. You get a move from 11 to 27 and then you're back down to 7 again. Right? You make a move from 8 to 20 and you're going to be back down to 5 soon. Right? I mean, this is the reality of these companies. So again, I'm selling skew for a reason. Okay. I'm selling skew because you're going to see here in a moment why. Okay. Now, let's take VSAT here, and I'm going to ask you a question. Mick says, sold half my position. Yeah, it's playing with fire, right? So let's say you didn't sell half your position. Now we're down 30% tomorrow. That's the reality, right? So with those stocks, you're playing with fire, and it's the hot potato, right? Hopefully you don't get stuck with a hot potato. But the hot potato can come any single day. It is a ticking time bomb that will go off at some point. Now, if I were projecting VSAT and I said, okay, VSAT, if I know with 100% certainty, and we got earnings coming up tomorrow, right? If I know with 100% certainty tomorrow, we're going to make a 20% move. Okay. We're going to make a 20% move in VSAT tomorrow. Which direction? Up or down? Yeah, so you go up 100%, then you have 40% drop in one day. Wipes it out, right? So 20%, which way? But that's good, Mick. That's what I've been talking about. You got to look to take profits, right? I've been saying this since June 23rd. You got to look to take profits. So again, you had bird in hand, you took it. That's awesome. Now you take half the position. You're up 100%. You tack out. You don't have any risk anymore, right? It's good. So which direction, up or down? 20% move tomorrow. So we know, again, assuming we know 100% certainty, it's going to move 20%. Huge move. Is it going to move up or down? I just want to get it. What's the pull? It's not a straight. Get a pick a direction, up or down. We know let's say we know with 100% certainty, it's going to be a 20% move. We just don't know the direction. Is it going to go up or is it going to go down? What do you think? Theo card, finally, somebody's playing. Carter says down. WK says up. Tim says down. TB said up. Tuna says down. All right. What are we're looking at a 50-50 bet right now, right? Up or down. I agree. It's probably 50-50, maybe a slight skew, but what we're talking about here is there, based on our little poll here, is there any skew in VSAT? Well, I guess if we added up all the ups and downs, we'd have a slight downward bias. So our skew based on our poll is slightly to the downside. What does the option market say for with regards to VSAT? Okay. So what does the market say about VSAT? So let me just introduce the concept of skew. So I'm going to go here to my, and I'll share this again. This is a blog post I wrote a while back. Okay. So I'm going to show you here. This is an example of skew. Okay. So based on our poll, downs had a slight edge. This is what's called negative skew. Our poll, in terms of expectation, has a slight negative skew. Now, what does that mean? See this long tail over here? I gave an outlier 20% move. That is a long tail. Based on our poll that we took, more people say the long tail's here, not up here. So based on our poll, we have a slight negatively skewed expectation for VSAT over earnings. Now, again, this is in essence what the option market is doing. It's pricing and expectations. So if these are out of the money puts over here, right? These are out of the money calls. We're saying that the puts are more expensive than the calls because they're not expecting a big move on the call side. The times where we expect a big move on the call side, we have positive skew. Don calls it reverse skew. But the idea is the outlier, the 20% move is up. There's no tail over here, right? So we've got positive skew, we got negative skew, and we got symmetrical distribution where we have an equal probability of an outlier move. Okay? Now we could talk kurtosis, which are fat tails, right? But in general, we pretty much in the options market deal with skew, not so much kurtosis. You can see kurtosis sometimes, and that just means there's a big expectation, very high expectation of a big move. Okay, but we're talking tails. So our poll for VSAT was negative skew. Let's see what the option market says. Okay, so if we actually go in here, we look at the options market for VSAT. We're going to go out here about 30 days. And we're going to see, what does the option market say? Which direction do they feel is more so? We'll go September 45 days out. And we'll look at the implied volatility. Okay? So as we look at the implied volatility, we'll see here on the call side, we go 85, 83.6, 83, 82, 82. The put side, 81.5, 82, 84, 85. Which direction is VSAT skewed right now going into the earnings? Tater says I got a prescription for my kurtosis. Okay. So look right here, right? Look at the implied volatility. Which direction is it skewed? Are we skewed negatively, right? Or are we skewed positively? So look at the implied volatility, both the magnitude and how volatility is changing as we move out of the money. Is it negatively skewed or positively skewed? Are we pricing the probability of a bigger upside move or a bigger downside move? It's negative skew. And how do we know that? Well, again, we see it because call volatility is falling, put volatility is rising, and put volatility is generally slightly higher than call volatility, equidistant from the stock price. Okay. So what are they doing? It's not super profound, but in essence, what are they doing? They're buying puts and selling calls. Okay. Why are they buying puts and selling calls? A slight negative skew. Exactly right. Why are they buying? Oh, sorry, buying puts and selling calls. Buying puts and selling calls. Why are they buying puts and selling calls? This is what's called a hedge, right? But it's a hedge for a long position, right? So in essence, we're hedging a long position. So when you have negative skew, the market's giving you something. Okay. What is it giving you? So remember, if you're trading a spread trade, doesn't matter whether it's a calendar, a diagonal, a vertical, except for butterflies and condors, they balance the skew out. But we want to buy low IV and we want to sell high IV. Right? We want to buy the low IV strike and sell the high IV strike. So if I'm doing a long vertical, so if I'm going long, I want to buy this and sell that. Right? I want to buy 81, I want to sell 84. Over here, do I want to buy 82 and a half and sell 82 and 82 and a half? Not really. 82.6, not really. Again, this is a slight negative skew. There's not, again, this is pretty flat out here, but VSAT is a company that typically has positive skew. What about another company here, right? Let's take IONQ. Okay, so IONQ, this is one that gets some significant call option trade. Back here in April, there were some big option trades. This one has earnings coming up. Okay, buy low IV, sell high IV. Exactly. Right? Let's look at IONQ. This one definitively had positive skew, but guess what? Is it shifting a little bit? Maybe. Let's take a look here. 87, 87, 86, 86, 87. This is a wider spread. So we're seeing a dip here a little bit. 88, 85. That's a wider spread. 88, 89, 90. So does this have, again, apart from these two contracts that have a wider bid-ask spread, does this have positive skew or negative skew? So we're seeing volatility rise, except for those two with the wide bid-ask spread over here. We're seeing volatility fall. Yeah, it's positive, right? So IO and Q, but here's the deal though. This has leveled out a little bit, right? This has leveled out. IONQ, is this a high short interest stock? Let's come in here and look. Oh, IONQ, IONQ. We'll go to statistics over here and we'll take a peek. Does this have high short interest? Yeah, 12%. The short ratio or the days to cover is a little low, 1.55. 35 million shares shorted, right? 12%, 12% of 300 million shares. That's a high number. So if you have a short position, how do you hedge it? So if you have a short position in IO and Q, how do you hedge it? You've got to buy the stock back at some point. So how do you hedge a short position? You need to buy the stock back. So you buy calls and you pay for it by selling puts. Right? You buy calls and sell puts. Well, guess what? Go back here 31 days out. That's driving up the call volatility and pushing down the put implied volatility. You buy calls and sell puts, pushing down the put vol, bidding up the call vol. This creates positive skew. So here's the deal. Is there any reason to buy stock in IONQ? Absolutely not. This company is highly disappointing. Went from 55 the next day, was down at 26. It lost 50% of its value in one day, and it wasn't even in earnings. This stock tomorrow could literally be at 20. And I'm not joking, right? This stock could literally be at 20. Is the option market pricing that in? No, it's not. Why? Because this stock has high short interest, right? Because they're hedging those shorts. But what's happening is we're seeing that the risk in this, we have significant upside risk, right? For shorts. But if the shorts are right, we also have significant downside risk. There's massive potential here, right? Up and down for big, big moves. And this would be another example of something called kurtosis, right? Kurtosis just means fat tails. These companies have fat tails. It's not just about skewing. We have crash risk to one side. You have crash risk to both sides. These companies have very high kurtosis, meaning what? The tails are fat and there's a slight positive skew, a little more skew to the upside, but the tails are fat. The volatility is high. And I don't even think the volatility really accurately prices in a 50% drop in one day. So do you want to own stock in companies that have fat tails like this? No. Why? Why put yourself? Yes, you can increase your portfolio fast if you want to take significant portfolio risk, but you're one day away from a 50% drop. You're one day away from a 30% drop. You get a 30% gain in a stock and it drops 20%. You just wiped out those gains, didn't you? You get a 100% gain in stock and it drops 50% a day. You gave back all your gains. You took all of that to get to 100%. And then in one day, it's gone. Right? How often do you get 100% gains? Not very often. But you get it more frequently. It's because there's fat tails. These stocks move crazily. But how do you take more manageable risk? You trade verticals, right? Verticals, because the skew is in your favor. It's not in your favor as much as it used to be, right? The skew's coming in. And why? Because things are starting to get a little tippy, right? Let's take RGTI in here. When is RGTI's earnings? It's coming up as well, right? RGTI in a couple of days went from 21 and then dropped to 5. It lost 75% of its value in 4 days, right? There's no way you're selling there. Maybe you rode through all of this and you're back to 16 months and months later. But any given day, football, any given Sunday, right? Okay. Any given day, you can be down 50%, right? It's just a matter of time. So as we look at, again, going 30 days out, skew. How is it skewed? 97.98, 97, 101. Again, the wider spreads kind of mess with this just a little bit. We're seeing call volatility rising. We're seeing put volatility fall. How is this skewed? Positively or negatively? How is this skewed? Positively or negatively? Rising call volatility. The exception of the ones that have wider bid-ask spreads. Falling put implied volatility. We're 30 days out. Positively skewed. Yes, Days Boy has it. It's positive, right? If you have positive skew, why would you ever buy stock in RGTI? The fact that there's so much short interest in RGTI, and how much short interest is there? Okay. And how do shorts hedge? They buy calls and sell puts, right? There's 17% of the float shorted. Moderate float stock, not a low float stock, moderate float, 24 million shares. That's a high number for a stock that has 284 million shares shorted. Okay. So the shorts are giving you something, right? They're giving you the squeeze potential. They're buying calls, which gives you gamma squeeze potential. This is ghost print stuff, right? And then on top of that, they're giving you an edge in pricing. Okay. All they're giving you if you buy stock is just the fact that there's fat tails. It can go up 50% one day and down 50% the next day, right? These stocks, the heavy short interest is giving you fat tails on both sides. They're giving you kurtosis. And yes, if you get out at the right moment, you can benefit from that kurtosis, but you're taking all of the risk all of the time. Verticals, you don't do that. Why? Because you can go in and say, look, yes, you're shorting this stock. Yes, you're hedging, and you're giving me a pricing advantage. I could come out here 40 delta-ish, buy an 18, and maybe I want to spread it out a little bit. I want to shoot for 22. There's 50 cents out here to sell. There's gold in them hills to sell, right? You're in at 69 cents. If this stock drops 50% tomorrow, you're down 68 cents. So take the 100 shares that you would buy and buy one spread. Take the 50 shares you might buy and buy one spread. Right? This gives us $4 of upside with 66 cents of risk. You have all of the upside and almost none of the risk. And it's just got to get to 1866 to break even. So when we talk about skew, this is what we're talking about. This is the benefit that it gives you. And guess what? In gold, why is Don trading GLD? How in the world do you put on a bullish spread on GLD? Because the skew is with you, right? Look out here, right? 15.15, 15.2. This doesn't look like a lot, but at 15% vol, there's actually some edge in them hills over here. It ain't to the downside. Go to GDXJ. So we're saying that we don't necessarily have fat tails. We don't have kurtosis in gold, but we do have skew. Crash risk is slightly to the upside. We look at GDXJ. Is there more skew? Not much. In fact, this just is pretty flat out here. 31 days. We did a 45-day spread. It's slightly for you as you get out towards the 40 delta. You can buy here and sell there. Buy there and sell there. It's pretty flat. So the spread cost us about 66 cents. There's not as much advantage in GDXJ, but it's not against you. It's not for you greatly, but it's not against you. See, we're kind of dipping out here. A little bit of positive skew in the GDXJ, but it's pretty flat. And 38% vol, it's probably not super high. Not a lot of kurtosis. You don't have the same degree of risk, and the options market's telling you that in GDXJ than you do RGTI. Flat, there's no edge. Yeah, it's pretty much just fairly priced. Okay. If you're buying and selling the same volatility, and is this perfect? No. But at least it gives you some foundation and basis to be able to do that. I'm going to flip this around in XLF though. And it could be less today. But if we look at the put side of XLF and we look at the call side here, 16.8, 15.7, 14.8, 14.3. And we look over here, 17, 18, 20, 22, 24. How is XLF skewed? Positive or negative? There's gold in them hills. It's a lot of gold in Utah, by the way. Negative, right? And here's the deal. You're never going to buy a call spread on XLF. You're never going to sell a put spread on XLF. The only time you might buy a call spread on XLF is when the skew declines a lot and the IV is high. So if skew falls a lot and IV is high, you might just let the vol crush help you. But you're not going to buy call spreads or sell put spreads on XLF. You'd be crazy. Don showed that this morning about the skew, but look at this. 45 days out. I'm going to buy a 51, 37. It's a little bit out of the money. Yeah, I usually have to be at 40, but if I buy this and let's just spread this out, $4, 47. This is an 11 delta, by the way, and you're getting 25 cents. This $4 wide spread where I'm buying a 37 delta, there's over a 70% chance we touch 51. Down here, we have over 20% chance of touching 47. But we also have low implied volatility. So I would suggest this volatility is lower, right? We're expecting volatility to rise. We're expecting the VIX to pop. We're expecting a 5 to 10% correction. So especially last week, volatility was relatively low. So from my perspective, that 11 delta, it was artificially low, or still probably artificially low. I'm expecting the volatility to continue to rise. And so the probability of touching 47 is higher than what this is expecting. But we get the skew in our favor. We're only paying 55 cents for a $4 white spread. Why would you ever short shares in XLF? You wouldn't do it. You just wouldn't do it. 47's down here. Where do we need this to get? We're buying a 51. All we need to do in the next 45 days for us to break even is for basically this thing to get to 50-50. You could close $4 wide spread, shoot for about 50, 60% of that. You could be out at 240, probably somewhere close to 48. 48. And you could probably get out at a 60% of the spread width as we get down here to 48. Why not shoot for the downside? Right? So we talk about skew. We want to buy low and sell high. We're buying low and we're selling really, really high. And not to mention, this low is artificially low from my perspective because I'm expecting the VIX to rise. Now, as the volatility rises in this, will this keep us from getting towards our max gain? Yeah, it does, right? Once we get in the money down here, we have positive theta and negative vega. How are we doing, Daniel? So this is the deal, folks, right? We want to use skew. And in this blog post, I talk about that, right? Skew. You're either with me or against me. When skew is in your favor, you don't need to short stock. When skew is in your favor, you don't need to go long stock in high kurtosis stocks. And again, what does high kurtosis mean? Skew is where the crash risk is to one side, right? That's negative skew. This is positive skew, right? Kurtosis, even if, and a lot of these companies, it's pretty balanced. Maybe there's a slight skew. It just means the tails are really, really fat. Are fat tails what you really want to invest in? Okay. This is what fat tails give you. I'm going to show you the example again. RGTI is a great example of this. This is what fat tails give you. There is no edge in owning the stock. You go up and then boom, you go down. Right? You go up and you feel great. You're up 50% and then down 2 days later, you're down 50% from the high. All of these companies, right? Yes, if you put a lot of money in them, you take significant risk. Can you get rich quick? Yes. But it's a gamble, right? Where is the edge in buying IONQ on the way up only to have a decline 50% in 2 days? Where is the edge in owning these kind of companies? Oh, okay, I'll do it again. Where is there any edge? So can you find an edge in it? Can you find an edge in owning IONQ only to have it go down 50% or RGTI? You could just go down the list, right? Where any given day it can be down 20, 30, or a week period of time, be down 50%. At the end of the day, there is no edge in owning stock in these kind of companies. They're just volatile. And you're hoping. Catapult that trade, that thing. Absolutely. Can you catapult these kind of companies? Absolutely you can. Okay, now here's the deal. Don likes correlation a little bit. So when we look at the skew index, this is market wide, right? Now all of a sudden this is market wide. Somebody asked the question earlier. In fact, someone asked the question earlier about what's the relationship between skew and the VIX. Generally, as skew goes down, as the VIX goes down, skew goes up. Why? Skew rises. This is for the S&P 500. Skew rises as what? Institutions are hedging their downside risk. This will always be negative skew, but there are times when skew really declines. If we get down here 115, we haven't been here since 2022, by the way. But if we sell off hard and skew comes down to 115 to 120, now you know you want to unlock your portfolio and take upside risk, right? This is where you probably want to load the boat up a little bit more, right? You're probably not loading the boat up in those high fat tail stocks. What kind of stocks are you loading the boat down here on? What do you think? So yes, you're feasting with high skew and a major short squeeze in the market. You might be feasting on call spreads on high kurtosis companies, fat tails, right? And possibly even some positive skew, using that to your favor to buy call spreads. But guess what? Down here, what kinds of stocks are you feasting on? Yes, right. But there's always buy opportunities, right? What are you feasting on down here? You got to be more selective up here, right? You might be more out of balance. But down here, you're buying what? You're buying the big names, right? Why? They're down big. So I'm not suggesting this is a generational buying opportunity, but this is the big one. So I know Gianni holds stocks, right? But hopefully I'm giving you a perspective here that says you can trade these stocks and you don't have to own the stock, right? You don't have to buy the fat tails. You can buy the skew that creates very low cost spread opportunities where you could maybe make 2, 3, 400%. And guess what? And if they keep running, like a SoFi, for example, why'd SoFi go from 12 to 24? It's not going up because this is a fantastic company, by the way. I almost took a job with them. You know that, Blake?
I
So
do.
I gotta pass this up. Did Tyler contact you too?
No,
I saw he's going down
he
the
likes
list.
you a
But,
lot better than me.
oh, okay. But
No,
man,
I
I
already
did.
actually worked in the same building as him, so I saw him a few times. So
Oh, did you? Yeah.
yeah.
And I'm like, oh, I can't believe I was considering it for a moment. But like I didn't have a CFP, so I wasn't qualified. But anyway, but the idea is you don't have to buy SoFi. You can keep rolling those spreads. You're going to get maybe 50% of the move, but you're risk out fast, right? One roll, you're probably risk out. So maybe you get 30% of the move. It's not bad, right? You don't take the risk, right? It's not the ticking time bomb that all these really just volatile stocks are. But anyway, I'll stop sharing here. So I'm a little bit over.
You're okay.
But
You
anyway,
are all right. Yeah, I'm back to wanting to short COF and Ally, my friend. So
yeah,
SoFi might be in the mix there. SoFi is a little more diversified away from subprime lending, but
yeah. Yeah, SoFi, again, they got, again, they're kind of
they do
bleeding
have
into the
some.
crypto space and stuff, but
Yeah.
I have no clue what they're doing. I was there, learning stuff. I'm like, oh my gosh. It surprised me Amazon did as well as they did because Amazon, they move you around. They have all these people. Okay. A neighbor of mine, he ended up moving up there, took a job with Amazon. He was
Hmm.
over the area where they print the DVDs. And guess what? Then they wanted to move him. Yeah. So like you order, if you order like an old DVD, like
Oh
it's
yeah.
out of print, they just print it for you and send it to you.
Oh, did not even know
So
that.
he went from over that, and then suddenly they wanted to put him over grocery. He had no experience in grocery. Nuts. But that's how Amazon
Just
works.
hit your KPIs, my friend. That's what it's all about in corporate America, right? As long
Yep,
as you can hit your KPIs, that's all that matters.
that's right. All right,
That's
I'll pass the ball to you. Have a great,
all
folks.
right.
We'll see you back tomorrow. Thank you.
Thanks, Brandon. All right, give me 2 seconds, everybody. We're going to talk about